Hey everyone, Eddie Campos here with RE/MAX Preferred Associates, and this is Coffee with Eddie. We're here at Union Home Mortgage. We're going to have a conversation with Cheryl Carroll to discuss what's going on in the mortgage industry and seeing what's happening with interest rates. Hey everyone, it's Eddie Campos here with RE/MAX Preferred Associates. We're back with Cheryl Carroll with Union Home Mortgage, and today we're going to talk about student loans and how they affect you in your efforts to be able to even get a mortgage, not just interest rates, but how it affects your mortgage in general. So let's say I'm a student, just graduated.
Yep.
I'm feeling really good. I've got my first career all set. And now I get this letter from the federal government saying, hey, great, congratulations, you just graduated, we need to talk.
Right.
How do student loans affect people being able to want to buy a home these days?
Student loans in the mortgage industry are a really big topic because so many people are going to college today. So a lot of people are taking out student loans. That being said, mortgage industry wants to make sure that you're able to make those payments, and do the mortgage. So there are many types of repayment plans that are available for people on student loans to help them get started. There's income-based repayment plans. Sometimes they can extend their deferred payments. They can put them in forbearance. Or they'll do a minimum payment of $5 a month. And so you think, well, okay, I owe $60,000 in student loans. Well, my monthly payment's only $100. So I can afford a house. I can afford $700, $800, $900, whatever, a house payment. Not necessarily in the mortgage industry, can you? So depending on the type of financing that you qualify for, you may have to do 1% of your balance.
So one of the concerns they may have is, yeah, your payment is only $50 today, but when your income continues to go up, then the loan amount, the loan repayment amount continues to go up,
Continues to go up. It could, or it could be, how are you going to pay this off if all you're paying is $50 a month? So mortgages are originated from the government. So student loans are typically from the government. So they want to make sure that they're going to be able to get paid back at some point. So FHA and conventional, they figure your payment differently. FHA, it's 1% of your balance. If you owe $60,000, it doesn't matter what your payment is, they're going to give you 1%. That's it. So now your debt ratio went from a payment of $100, now you've just added $500 to your monthly debt ratio. So it makes it more difficult. Conventional, they'll use whatever your payment is. Whatever the agreed upon payment is that's on the credit report, they'll use that as your payment.
So student loans, another factor that's pretty significant when you're trying to figure out what someone can afford, how much house they can buy. So debt ratio, income,
right,
reserves,
right,
student loans, yes or no, and how much?
That's right. Yes, absolutely.
Okay, well, lots to learn today on student loans and interest rates. If you're interested in talking to someone about getting a home and you're thinking that you can afford it, what I strongly suggest is to always speak to a lender first and foremost. Cheryl Carroll has been in the business a long time, and I know that you can trust in her to do an excellent job for you and give you the great advice to be able to move forward. Sometimes that doesn't mean that you can buy a home today. Sometimes it means that you can buy a home in 6 months. However, you need that guidance to be able to make those decisions. So please seek her out and she'll take good care of you. This has been Coffee with Eddie. Thanks for coming back, and please see us again next week.